Hi everybody, it's Mark here at Teslary, and Tesla's closed slightly red today, $262.99, or just about 0.25% lower than yesterday's close. And overall, like just looking at the price action, this is kind of ideal in the sense, like we don't want it to be red, we want it to be green every day. But considering that we broke out of this kind of ascending triangle, and this is a very common pattern for Tesla to kind of break out from these triangle type of shapes. You see it here over the last week, and you've seen it in previous weeks on some big time frames, where it breaks out and because this is a very bullish move to the upside. So we had a really good move since the 9th, and the overall peak to trough, that was 6.8%, and we've sold off about 2.25% from the high. And honestly, that's not necessarily a bad thing. Seeing some profit taking is pretty normal for a move like that. We actually had a really good opportunity to go short. We had a nice gap up in the morning, and that was 260. Yeah, we saw in the 268s. And if you can see, it would challenge the high that it had from yesterday. That would have been a really good time to try to get in a short. I got in a short for this Friday, which was like a 260 put. And I think it went up something like 60% by the time I closed it out. I didn't really close it out perfectly. I just wanted to kind of hold towards the end of the day and just be sure. You know, I had profit in it, and that's better than nothing. And I kept my longs, my upside hedges that go into next Friday. So they kind of lost money, obviously, but the hedge kind of made up for it a little bit. But it adds on to the other hedges that I have, which are sold calls that we talk about all the time. But looking at the pattern that the last 2 days has kind of formed, you're seeing what some people would think this is what we want to see, which is a bull flag pattern. So you have a pole here. So the pole goes over the last 2 days from the 9th to the 10th. And this action here is just your typical flagging pattern. And what you want to see thereafter is, and let's move this out of the way. You know what we want to see tomorrow is, obviously tomorrow's going to be a big day, personally. Tomorrow's going to be CPI, and we'll look at some consensus numbers or estimates for what they expect CPI to look like. And the overall market is kind of drawing a pattern similar to this bull flag structure. But I would say the indices or other tickers are actually looking better than Tesla. But Tesla has been outperforming the market for a little bit, so that kind of makes sense. But also Tesla has a lot of headwinds in the near term, which is going to be its earnings. So it might be a little bit weaker as the next days go on. And if you watch my previous video, I talk about some news that I won't include in this video. That news would be Tesla hitting 20 million batteries made at the Giga Texas battery factory. So it's the 4680s. They were able to make 10 million within 4-ish months, or just slightly less than 4 months, which is a very, I guess, from the outside looking in, it's a very slow ramp, but for, Tesla people, they can understand that we're having a lot of trouble with batteries, but being able to kind of double the amount of batteries that we made in a lot less of a time, because it was June 16th that we made 10 million. Now it's been 4 months later and we're up to 20 million. The other bit of news in that video, the previous video I uploaded, would be the Adam Jonas note. So there's a luncheon he had where he talked about Tesla with Wall Street investors, and they're very, very bearish. Check out that video, and I go over all the key takeaways for that. But it kind of mentions the headwinds that we'll be facing over the next couple days as we go into earnings next week, which would be what? It's going to be Wall Street coming around, and you can tell, like from the delivery consensus, that Wall Street wasn't really keeping track of Tesla very closely. They half the consensus, or half the analysts, didn't have a revised delivery number considering the closure of the factories. That's why the consensus number was higher on average than, let's say, community analysts within the Tesla sphere. So going into next week, what we might see based off Adam Jonas's note is what we might see maybe. Other analysts start revising their earnings per share down. You can see them perhaps also revising down for all of next year as well. That's his implication. And unless we get some Cybertruck news, he doesn't see much hope for Tesla's price action over the next couple months, and maybe next year being really, really volatile, with issues with volume and production, issues with Cybertruck ramp, and things like that. So I go over that in the video. You should check it out. It's really, really quick as well. But let's, before we continue on the charts, I talked about CPI, and I want to show you the CPI consensus numbers. I want to talk about PPI real quick, and then we'll talk about what might happen with the market and take it from there. So let's go to the browser. The browser shows a kind of like a compilation here of the consensus for CPI's headline number tomorrow. And you're basically seeing everyone's kind of in the same boat, around 3.6% being the median average. I would say, 3.6 is a high headline number, but I always say it all the time. All that really matters is going to be the core number coming out tomorrow. And some people are saying that the core can come in really, really low. And if you see flat month-to-month numbers in core, I think that's really, really great news for the economy. I don't know what that really does for the stock, because we'll show an example of things that just don't make sense when it comes to how people react to CPI. And that was really just last month's number that was reported in September for August's inflation reading. So what is consensus? If it's 3.6 for the consensus from analysts, the street estimate is 3.6. And honestly, it's just a matter, I think. So what we really care about is going to be core CPI. We want to see an actual something like month over month. I would like to see that around 0.1, and that would maybe get us to a year over year somewhere in the around 4.0 area, which I would think would be really, really good just for the headlines, not headline CPI, but what the mainstream media or the finance television networks would talk about, which is that if you talk about like on a 4-month basis, core inflation is going to be something like 2%, 2.1, 2.2%, which is basically at the Fed's goal of a 2% inflation target. And if they consider the core CPI as the reading that matters, and if they want to take a 4-month number, kind of annualize that out, I think we'll be basically there. You're also seeing some really dovish Fed speak in regards to the the inflation target. When it gets down to 2%, they can see maybe a long-term target being anywhere from around the mid 2% area, meaning like 2.5 and up, with the implication that getting headline inflation down would be a years long prospect. And if they can maybe revise that the inflation target up a little bit, they can sell it to the American public that their job is done and mission accomplished. Now we talk about PPI, and PPI came in quite hot, to be honest with you. And that was kind of what happened last month as well. So the PPI increased 0.5% instead of the estimate of 0.3%. So you kind of saw in the pre-market a little bit of a sell-off, but it kind of rebounded. There's a couple of reasons for that. So you might ask, like, why, if PPI is up, why is it that the market took it relatively well? Meaning it was up much more than consensus would have thought. And I think there's two factors. Number one, it's PPI, not CPI. And we've also seen it where the street wants both numbers. They want the PPI and CPI in before they start making a call for a direction. And at the same time, stocks have been selling for weeks, and you got to get to the point where there's no one left to sell. Like, so everyone that's selling is usually people who bought in the morning, and that's kind of what I see it as. It's like you see a lot of buying in the morning. All of a sudden you see a drop in the price action on the index, and it's just like a quick drop. And all I'm thinking in the back of my head is like, yeah, that's just everyone who bought in the morning. They got their money, they got their trade in, and they're done for today, and they're selling everything. But from everyone else, like people who are like the CTAs, for instance, they're not hardly positioned in any way. And of course, they could have really loaded up over the last 2 days on the CTAs, that is. And we know that asset managers are pretty heavy right now as well. But I think they're going to be heavy for the rest of the year, and unless you see a CPI number come in that is just out of control hot tomorrow morning. And I hope that's not the case, because I really don't. I think this should have been it. I think the bottom. I think I really wanted to see a bottom come in already, because the selling that's been happening on non-Tesla tickers and it's been brutal. I mean, just look at Target, look at Disney, look at Nike. I mean, these companies that shouldn't be as volatile as they are incredibly volatile. And I mean, I get it. The economy is not that great. I understand that completely. But some of these tickers have had no relief at all. I mean, none. There's not a mini bounce. There's not there's some tickers have look like it's completely hopeless, and they're still bringing in billions of dollars. And I get some of them are really, really in debt, and their capex needs to get under control. I understand all of that, but man, some tickers are really, really beat up. Just remember, the market says it all the time. If it wasn't for the Magnificent Seven, quote, the really big mega cap tech stocks, this market would be in the toilet 100%. And not just even now. What I mean is for the entire year. You can kind of look at that with equal weight. You can look at that from the IWM. So the ticker RSP represents S&P 500 equal weight instead of weighted with like the big mega caps taking up a large portion of the weighting. And another easy example is looking at IWM, and these tickers are completely destroyed, completely. So we'll switch over back to the charts and we'll look at Tesla and talk about what we want to see with Tesla. Obviously, if this is the flag, and I get it's a small time frame flag, but what we want to see is just a really quick breakout. And the breakout might not happen at the release, right? We've seen it even today. Like, so when PPI came out, everyone felt pretty sad and bearish about it. But the market eventually closed green. And we can kind of maybe see it that way too, where the initial response is kind of like they want to scare you out of your position. So the market might do a quick sell, even if it's good. And then you hope for the recovery during the course of the day. So let's say, I think that scenario, we open. I think there's two green scenarios. You just gap up, right? And I think the gap up would be somewhere in the range of like, if it's good, the gap up should be like 0.9%. And that would be like, what is that here? 266. So that's our really bullish scenario. And I think in the morning, it would actually just go over the estimated move. If it's really, really like, let's say core is completely flat month over month, then I think you go over the estimated move, right? That's what I think. And we'll turn that green. And you have kind of like the scenario where it's at the end of the day, it's bullish, but in the morning it looked really dire. And what you could see is a really sharp gap down. And let's measure that out. I think the gap down would be something like 0.7%. So maybe around 262. And you would see it eventually it would be a gap down, but eventually slowly churn upwards towards the middle of the day and then close slightly green. And then worst case scenario, it's really, really bad. It gapped down probably 1%. So let's say somewhere in a range of 260. And then you get yourself into the triangle. You do something like this. You try to like test the bottom side of the gap down. And then you kind of just fall off from it, something like that. So if you see action take a direction, I think the gap down would be kind of a clue as far as how really negative is the market responding to it, like how much of a gap down that is. And if it pumps really hard in the morning, just know that we're going to look at some charts right after this that kind of show like, yeah, we could have a really, really good day. But let's just look at what happened last month and just kind of prepare ourselves for what could happen after PPI and CPI come out. Now, looking at US 500, this is the area of the highlighted area in the box is from CPI, PPI in the Friday thereafter. So so this is Wednesday here in this action, and then here's Thursday, and Friday is this large sell-off. Now, the PPI and CPI for for August, which is reported in September, we talked about this in our videos, and it was kind of hotter than expected as well. And everyone was kind of baffled by the fact that, okay, yeah, it's much hotter, but for some reason, the price is generally going up. And then come Friday, the sell-off basically, zeroed out every single gain. It was a pretty sharp sell-off, and that kind of continued going into the end of the month. Now, you can kind of chalk this up for this is just a very natural seasonality thing where, okay, they know that September and October can be pretty weak. So if you get a nice pump on really bad CPI and PPI numbers, you might as well sell everything you have. And that's what I think they kind of did. They sold everything they had and just kept selling for weeks. And that is just from the seasonality aspect. And we talk about why that happens. We talk about the motivations for that in a lot of our other videos. But so this is something I just want you to be aware of. Like, okay, we have this move where it's like we had hot inflation numbers and the market went up, but eventually it turned negative and completely zeroed out those gains. But caveat, let's look at S&P 500, and you can see that we're getting a little bit of buying after hours, which is nice. But you remember I said that, we were kind of in this bull flag pattern on Tesla. But if you look at the other tickers, be it the this is SPY, it already kind of drew it out, and then it broke out of that flag already. It kind of had a little bit of resistance. This is the 15-minute. If you can probably maybe see the resistance on the smaller time frame. Here's the 5-minute, and you can see the 1 minute where it finally broke out of its flag. Right, that's a really good sign for the market. Now, I get the market is not that healthy looking from. If you look at the components of the market, the equal weight, it's still relatively weak. But who cares right now? This is a good pattern. This is good for the market, but it kind of sets it up for tomorrow. Some people, when they see these kind of pumps after hours, this is a really good opportunity to enter a short cheaper than you would have paid for during cash hours, right? But also, it's kind of staying at the top that you saw from the pricing from yesterday. So it's kind of just setting it up for a possible double top kind of scenario. That's what, bull flags, they can kind of just look like that eventually. It can be just like a swing that fails, and it just sells off after making a pseudo double top. And it might be more clean in the US 500 or the futures. That pattern might be a lot more cleaner, a double top pattern, or even a continuation of the bull flag. But so why do I think that's pretty good? I mean, number one, like we've looked at the indicators and it's been pretty oversold on the S&P 500. You can see here's the RSI on the daily. We're getting to the point we're getting kind of in the middle RSI, but you can see where we bounce off of. And let's compare that to the lows in September of last year. And you can see it right here that it kind of did that same thing. Got to the middle, it struggled a little bit, but eventually it broke out to a new high. I wonder how long it will take for us to do that on the S&P 500. It may take a week or two, but who knows? Like the market can do some crazy things, making a new high. But let's go back to a smaller time frame and look at what happened during the rally going into June from May, and just try to remember this pattern right here. So this pattern right here, this is our bull flag for the last couple days. And let's find, here is the breakout from the lows from the end of spring into summer. And you kind of have that same bull flag pattern where you have this, the bottom. And actually let's look at the bottom on our chart real quick too. So here's our bottom. You can see it does this. It kind of works out a bottoming process. And this is, I think, a pretty healthy bottom that just rockets off the volume profile, which is near the gap area. And it kind of flags a little bit. It's not really a clean flag. And it flags again. And it kind of, it's basically in a really bullish momentum. And you can see very similar to that. So you kind of have, it breaks up, it breaks out, makes a high, sells off, kind of struggles a little bit, but finds its legs, goes up, flags again, breaks out again, and now into a more well-defined flag. And what is the action that happens, which is kind of really healthy action, is there's a gap up, okay, fine. And it gets bought up a little bit, but eventually it sells, it closes the gap, but it doesn't make a significant low. And I think I actually talked about this in this video back in June. It doesn't make a significant low, and it kind of bounces off the top of that flag range. Right here, that yellow line bounces off of it, and you can see these candles getting bought up, and eventually it goes up a lot. And so that can kind of happen tomorrow if the CPI is really, really good, where it's already broken out of the flag. Worst case scenario, let's say to replicate the same action that's a little bit healthy as well, is that you have it look like this and get out. Where it would be, what would be an explanation for that type of action in a bullish context? It would be like, okay, inflation looks good, it gaps up, but Wall Street wants you out of your position, so they sell it until it gets kind of threatens to go, what would that close look like? That would be like a 0.3%, 0.25%, just enough to try to maybe scare you out of your position, and they'll be buying the whole way down, and then they'll shoot it up towards the end of the day. What does it really look like on a kind of a really, really a bad inflation print number, really, really hot inflation? It's going to be a gap down. I wonder what on S&P 500, what would that be? Something like maybe 0.4%. I would say it's going to be right around here if it does that. And then it could be something like that. Kind of really violent, but kind of to the downside. But I guess we'll see. You can see the same thing happening in the QQQs. Let me see on a smaller time frame, and you can see how it's actually breaking out of its flag as well. So that's going to be maybe a really good look for the market if this kind of continues. Like, this is pretty healthy bullish action, I think, so far. And I think we can confirm it with what? We can always confirm it with yields, and yields are coming down still. I mean, I know it's a little bit higher in the after hours trading, but this is a good look. We wanted this to happen. We wanted it to break below the yellow. It broke below the yellow line this is our level. It kind of tested it and just completely collapsed below it. That's a good sign for yields. You can just see it on the 10-year as well. The 10-year is looking relatively weak, and that's a good thing for equity. So look at that. It's basically what we thought it would be, double top and swing low, just plummets. That's perfect for now. As long as yields follow, and you can always just kind of track the yields tomorrow morning during the release of the CPI. I think yields would be a much cleaner understanding of how the market is taking the inflation number, right? Let's say initially the yields go up, and if it's bought back down really quickly, but you're not really seeing the S&P 500 moving the same way, I think you can kind of be confident though that they're setting up to kind of to recover on the actual equities on the stock market itself. So keep an eye on that. And I think oil is coming down as well. Oil had a pretty big crude buildup in inventory from today's report. Kind of sent oil going down a little bit. And the XLE was a little bit more resilient than the actual underlying commodity. But oil coming down is really good for inflation. But at the same time, from what the government was reporting, gasoline demand has been really, really low over the last couple of weeks, which doesn't really line up to what we were seeing with the oil's action over the last week. But, all these numbers are made up from the government. Anyways, okay. I wish everyone luck for CPI tomorrow. Maybe we can kind of use these kind of guides as kind of trying to predict what the action could look like. But I would say, I think there was really good opportunities to get some hedges in during the last 2 days. And I hope you guys took advantage of that as well. But good luck, and we'll talk again tomorrow. Bye.